Hi everyone, I'm Debbie Roberts, owner and financial advisor at Property Apprentice. Join us today for the Week in Review, where I talk about current events for the everyday investor and home buyer. Our topics for this week: topic number one from One News on the 3rd of July, average New Zealand property value sees modest uptick in June. Topic number two from Good Returns on the 1st of July, service agreements could help banks processing timeframes. Topic number three, the Mortgage Mag, 2nd of July, little growth for the rest of this year expected. Topic number four from RNZ on the 3rd of July, consumer spending on the rise. And last topic for this week in review from realestate.co.nz on the 3rd of July, oops, I bought a house. So first up for this week in review from One News on the 3rd of July, average New Zealand property value sees modest uptick in June. And as always, we've got the links to these articles in our show notes below. New Zealand's average property value rose by 0.2% in June, reaching $815,389, according to Cotality New Zealand's Hedonic Value Index. This small gain reversed minor declines seen in April and May. Since peaking in January 2022, values have declined by 16%. However, they've edged up 1.1% since September 2024 and are up 0.6% for the year to date. Major cities saw relatively stable prices, with Auckland and Wellington holding steady. Modest increases were recorded in Dunedin at 0.2%, Hamilton at 0.3%, and Christchurch and Tauranga both up 0.6%. Cotality New Zealand, that's previously known as CoreLogic, so Cotality's chief property economist Calvin Davidson noted that while falling mortgage rates typically stimulate buying activity, other market conditions are tempering demand. An oversupply of listings is giving some buyers leverage in negotiations in some areas, while job insecurity is also weighing on buyer confidence. Davidson said that the current softness in the market is creating opportunities for first-home buyers and small investors, particularly those first entering the rental market. Outside the main centres, the picture was mixed. Rotorua had a drop of 0.7%, Gisborne had a drop of 0.2%, Whanganui 0.1% drop, and Hastings negative 0.1%. So they all saw slight declines. Meanwhile, Whangarei 0.4% increase, Palmerston North 0.5% increase, Invercargill 0.4% up, and Queenstown 0.6%. So all of them experienced modest gains. Davidson pointed to regional variation driven by factors such as lower mortgage rates and strong dairy sector performance. However, ongoing economic uncertainty and a weak labour market continue to create month-to-month fluctuations in housing trends across the country. Second topic for this week in review from Good Returns on the 1st of July, service agreements could help banks processing timeframes. Turnaround times at New Zealand's major banks continue to frustrate most mortgage advisors and clients, prompting the Financial Advice New Zealand Mortgage Advisors, that's FAMNZ Group, to call for formal service level agreements, or SLAs, across the industry. Lee Hodgetts, FAM New Zealand's country head, said delays averaging 7 to 10 days and even longer for complex applications are undermining consumer choice and causing unnecessary stress during key moments in the home loan process. These delays aren't isolated cases, Hodgetts noted, attributing the issue to both staffing shortages and inexperienced teams. Although banks are hiring and training new staff, she said the learning curve is contributing to extended wait times, increased back and forth, and rework that resets progress on applications. She also pointed to ongoing impacts from overly prescriptive loan assessments and after effect of the triple CFA reforms as a source of bottlenecks. While banks have acknowledged the issue and are investing in automation and process improvements, Hodgetts said more needs to be done to create consistency and fairness across all lending channels. Discussions have begun around implementing SLAs, which are common in other business partnerships and could help restore clarity and accountability in the mortgage process. FAMNZ is also advocating for fewer forms and a more standardised approach among lenders to streamline workflows and reduce inefficiencies caused by inconsistent requirements. What advisors are asking for is simple: clear timeframes, consistent expectations, and a genuine partnership that supports better outcomes for borrowers, Hodgett said. With delays persisting, more advisors are turning to non-bank and specialist lenders. These lenders, often unavailable to the public directly, are attracting clients thanks to their faster processing times and more flexible service. My recommendation is to make sure that you're working with a mortgage advisor rather than going directly to the bank yourself, because if you're going directly to the bank, then you're not getting proper financial advice. So, a mortgage advisor can work with you to make sure that your loan application is the best fit for purpose. And sometimes that might be a non-bank, sometimes it can just mean waiting a little bit longer. Topic number 3, the Mortgage Mag on the 2nd of July. Little growth for the rest of this year is expected. Mortgage advisors already stretched by slow bank turnaround times and rising application volumes can expect little relief as the property market continues to show limited momentum. Despite falling interest rates and steady prices attracting more investors and upgraders, first-time buyer activity has declined after dominating earlier this year. Both ANZ and BNZ have scaled back their house price growth forecasts for 2025. ANZ now expects a modest 2.5% rise, down from earlier projections, while BNZ predicts growth of just 2 to 4%, revised from its previous 5 to 7% estimate. Both banks forecast a 5% increase in 2026. ANZ Chief Economist Sharon Zollner said that although the Reserve Bank's OCR cuts, totalling 225 basis points, and looser credit conditions have helped stabilise prices, demand and supply indicators have remained flat. Approximately 1% of ANZ's 2.5% predicted growth had already occurred in the first 5 months of 2025. Zollner noted that while sales volumes have recovered to historical norms, this upturn is far more subdued compared to previous easing cycles. She expects further OCR cuts and a stronger economy to boost prices more meaningfully next year. BNZ Chief Economist Mike Jones warned that describing the market as flat oversimplifies the situation. Despite sluggish price growth, there's an evident pickup in property transactions and lending, especially in regions like Waikato, which is up by 10%, and Canterbury, which is up by 30%. Jones highlighted increased activity among owner-occupiers, who now account for 60% of all new lending. Investor activity also remains solid, while the share of first-home buyers has dipped a little bit, down to 20%, which is from a recent high of 25%. BNZ expects some softness in demand mid-year, partly due to uncertainty from international trade tensions, and also, I'd like to add, perfectly normal for winter as well. While mortgage rates may continue to decline slightly, the end of the easing cycle is nearing. Market consensus places the OCR low at 3%. BNZ projects floating mortgage rates will bottom out in the low 6% range in the coming months, with shorter fixed rates from 6 months to 1 year terms easing to around 4.5% to 5%. However, significant drops in longer-term rates are unlikely. So my thoughts on all of this are that we have got quite a balanced property market at the moment. There's a lot more market activity, so a lot more transactions are going through. However, we're also seeing a lot more listings coming onto the market as well. So that's keeping the supply and demand side of things balanced, which is good for tenants, and it's also good for those who are looking to get a bit of a bargain in the current market. If you'd like to learn more about investing in property, join me at one of our free events called How to Succeed with Property Investing. I'll discuss strategies for successful investing from my perspective as an experienced investor and a financial advisor, and all of our free events are available live and online. Check out propertyapprentice.co.nz for upcoming dates and register today. We don't sell property, so it's all about increasing your knowledge to reduce your risk. If you've already been to one of our free events and you'd like to find out more about how we can help you to reach your financial goals, you can also book a no-obligation phone call or meeting with my husband, Paul Roberts, via the website. And hey, just in case you hadn't heard, if you are really keen on buying a new build, we can get clients of ours a discount on the purchase. Topic number 4 from RNZ on the 3rd of July, consumer spending on the rise. New data from Worldline shows a slight rise in consumer spending with a 0.8% year-on-year increase recorded in June. Core retail merchants processed $3.6 billion in transactions during the month. Bruce Profit, Chief Sales Officer at Worldline New Zealand, said this modest growth continues the upward trend in April and May. He noted that the June quarter's 1.2% annual growth marks the first positive quarter since early 2025, signalling a potential shift in retail activity for the second half of the year. Despite June typically being the quietest month for retail, spending held steady, even with a calendar shift that saw one less weekend day compared to last year. However, hospitality spending declined 2.4% year on year. Auckland and Northland saw the steepest drop at 4.3%, while Nelson recorded a smaller decrease of 0.5%, likely influenced by recent severe weather. In contrast, regions like Waikato saw spending rise by 3.3%, partly thanks to the Field Days event in Hamilton. The strongest annual increases in core retail spending came from Whanganui, 6.9%, Taranaki, up 4.1%, and Nelson, up 4%. Meanwhile, Wellington had a drop of 1.8%, and Auckland and Northland had a decrease of 0.7%. So they saw declines compared to the same period last year. Topic number 5. I love this headline from realestate.co.nz on the 3rd of July. Oops, I bought a house. That piqued your curiosity, didn't it? A recent survey by realestate.co.nz has revealed that nearly 1 in 4 New Zealanders have purchased a home without initially planning to do so, highlighting a growing trend of spontaneous property buying. The study found that 24% of respondents had become homeowners at some point without the intent to buy, with 8% making such unplanned purchases in the past year alone. Realestate.co.nz spokesperson Vanessa Williams noted that while the idea of an accidental home purchase may seem surprising, the data suggests it's more common than expected. She explained that property browsing is a popular activity in New Zealand, and visiting open homes or auctions can quickly shift from casual interest to serious commitment when buyers come across the right opportunity. Williams also pointed out that buying a property often goes beyond the transaction. It's about securing a lifestyle. Emotional connections to a home or a neighbourhood can heavily influence decision-making. The company has tracked this trend since 2020, showing patterns that reflect broader market movements. The 2025 data marks the highest rate of spontaneous buying since April 2022, which followed a particularly active property market. Income appears to be a key factor. Those who made unplanned home purchases in the last year reported personal incomes 54% higher than the national average. These buyers also tend to be younger, with an average age of 30.2 years and more likely to be male, accounting for 66% of this group. Auckland stands out as the leading region for impulsive buying. Over half of Auckland respondents, 51%, reported making a spontaneous property purchase, compared to 31% across the rest of the country. Williams attributed this to higher average incomes and the city's broad range of housing options, which may encourage buyers to act on an opportunity. While having a clear investment strategy remains important, Williams said that the findings underscore the value of staying open to unexpected opportunities in the property market, something many New Zealanders are already embracing. My thoughts on this are, if you are in the market to purchase a home, even, subconsciously, then the first step should be to get in touch with a mortgage advisor to find out what your borrowing capacity is. You might be pleasantly surprised because bank lending criteria is quite friendly at the moment, even though it takes time. So I highly recommend that you get a pre-approval for lending before you start making offers on a property, and then you can confirm the lending once you've found a property and got it under contract. Are you surprised by how many Kiwis stumble into buying a home? So are we, until we looked at the numbers. With flat house prices, lower interest rates, and banks backing low deposit buyers, the market is more open than it looks, with a lot of first-home buyers getting 90% lending, so only needing a 10% deposit. Don't assume that you need to have 20% deposit if you're buying a home. Join us at one of our free events called How to Succeed with Property Investing. These events are all available online, so you can gain valuable insights and strategies tailored to today's market conditions, regardless of where you live. Whether you're an experienced investor or just getting started, this free session will equip you with the key tools and insights to make more confident, informed decisions. Don't miss out. Register today and take the next step towards achieving your financial success. In our free events, I'll also tell you more about how we could help you as a client to achieve your investing goals. So if you're interested in finding out more about what we do, go to propertyapprentice.co.nz today and register for one of our free events. If you've already been to one and you'd like to find out more about how we can help you on your personal journey, book a no-obligation phone call or meeting with my husband, Paul Roberts, through our website. That's propertyapprentice.co.nz. Thanks for listening. Hey there, want to stay on top of the latest property news and trends? Subscribe to the Property Apprentice podcast for weekly updates that will help you to navigate the market like a pro. We cover everything from insider tips to expert interviews, so you'll always be in the know. And don't forget to ring the bell and hit that subscribe button here on our YouTube channel for even more helpful content to boost your property journey. Check out the link in the description to subscribe to the podcast, and we'll see you in the next episode. Happy investing.